Guess we're going now. We rolling? Yeah, we are. Hey guys, how's everyone doing? This is Hala Pablo, and thought we'd do another video on traumatized tokens. The finance tokens primarily seem to be the ones that have been targeted by the Security and Exchange Commission. If you wanted to narrow down some of the targets in their broader assault against crypto in general and cryptocurrency, and this is no coincidence or anything like that. Like I explained in the video on Algorand, this is a tactical assault crackdown on assets that pose the biggest threat to the federal coin, to the CBDC that is in the makes of being rolled out in this country. Countries will come out with their own CBDCs in the future, and the United States is no exception. The problem is right now is that crypto is still too strong, so that poses an adversary, a very formidable adversary to Fedcoin. So they want to eliminate the competition or emasculate or weaken the competition as much as possible to make way for the red carpet rollout of the federal coin, which of course will be centralized. So the competition is with the decentralized nature of crypto, and regular people, regular Joes who aren't in the illustrious club, federal club, you know what I'm talking about. Those of you that are not connected, we, if given a chance, right now the distrust in the federal government is so high, especially with this present administration, that I don't know if I'd trust my USD to be converted into CBDC. I mean, many of us may not have a choice. If we're paid, especially those of us who work for the government, that's what you're going to be paid in, and there's no ifs, ands, or buts about it. You're going to be paid in that. But the possibility will always be there to convert. Just like our USD, you could put it into stocks, commodities, index, futures, precious metals. You can invest. There's all kinds of investment vehicles that you can deploy your fiat into, and the same thing goes for crypto. And there's really nothing apart from like barring crypto altogether and making it illegal to deal in cryptocurrencies. There's really nothing that Uncle Sam can do about it. But what they can do is crack down on certain crypto tokens and coins and deem them securities now. and by doing so, impose stricter regulation upon them and generate fear, uncertainty, and doubt around them, and thus cause them to bleed out, distribute, to be delisted on certain exchanges, and basically engender a feeling of distrust in these. So when the CBDCs do roll out, people will be more inclined to trust USDC rather than, say, Dash or Solana or Zcash or Monero or Bitcoin or whatever. So if they can get away with hitting certain cryptos that they see as the most adversarial, that having the most adversarial potential to challenge the hegemony of the CBDC, then that's what they're going to do. And I've found that there has been a inordinate amount of attention poised at the finance coins in general. So when I mean finance coins, I mean coins that facilitate and tokens that facilitate peer-to-peer payments. Coins like Dash, XLM, XRP, Zcash, crypto assets that have been designed as like the digital version of PayPal or Venmo or Cash App. So you could pay your bills with them in exchange crypto in different currencies. So I think that it poses a big threat to the federal government. And so they're going to hit those naturally. And one of those is Dash that has been hit. Dash, in fact, Dash stands for digital cash. So that landed right in the crosshairs of the SEC. And the centralized banking lobbyists see it as an anathema and a challenge to their system. And so once there's a threat, if there's a threat to the overarching hegemony of the centralized banking system, everything is foundationed on that in this country. And something that is digital or decentralized poses a very real threat. So you could be damn sure they're going to come after anything like that with all they got. And that's exactly what they did back in April. They came against Dash, and just to pull up a article, this was back in the Times. So they're claiming that Dash claims that it's a security, and but the Dash community responded, there's no reasonable expectations of profits. Basically, security meaning that you can generate yield by holding it, by staking it or whatever. So this is deemed to be a security and thus needs to be regulated. And people like you and me, regular investors, are too stupid and too irresponsible to be able to invest in these things without Big Brother babysitting us. It's basically what it all means in a nutshell. And so they impose regulations and penalties on these companies. And so, but the community strikes back and saying, nobody gets paid for just holding Dash. It's not a security. The SEC doesn't care about that. They've been lobbied by central banking people to wage war against anything that like we said, threatens their dominance. So they're going to come against it and sue Dash and sue the developers and such. So anyway, you could read this. There's all kinds of stuff on it. I'm going to be doing other videos on other payment systems like XLM, XRP, Zcash, Monero, and things like that. And we'll go through all of these, and you'll begin to see a golden thread going through all of these crackdowns against crypto, like a common denominator, and that is the financial aspect of them and the payment aspect of it, where you can make payments like we talked about. But let's go to the technical analysis side of it. So we see right here, basically, it was going to redistribute anyway, I think, even if the SEC didn't crack down on it. I think all of these cryptos have been in a tailspin since last year, the beginning of like mid last year, with the whole Luna and FTX debacles and everything like that. We've been in a macro bear market, so it's no surprise. So this was just yet another redistribution range here with this primary support. And so we came down with a selling climax, automatic rally, rebound, secondary test, UT. This is an upthrust action. This was all normal and fine. This was to be expected. But by coming back down and remitigating the sign of weakness in phase B, we've basically have a triple mitigation now. I'm going to pull this out. This is on the 10 hour. Let's go to the 12 hour. And we see the prior low of March 20th, 2020, that we mitigated it the first time here back in November. And then after the SEC's crackdown, see, we had a UTAD, an upthrust after distribution, where it came back up, remitigated. It actually went even higher than the PS point, came back down. And it was on April 17th, I believe, where the SEC cracked down on crypto. And that was around the same day where they came against Algorand as well. And then we see this bleed out, this slow bleed out with these series of last points of supply as it goes down. All I want to say, guys, is there is a reason why we just talked about the SEC is cracking down on these. I've never really paid much attention to Dash. I was never like a big Dash guy. Same thing with Zcash. But if the SEC is coming against them and is causing them to really bleed out and retrace, distribute even beyond retracements, then there is a good reason for it. And I believe that these distressed assets, these traumatized tokens, have a very good potential of rebounding, just like we've seen, XRP, when they won that, when they got that favorable outcome in the courts just a little while ago, that now it's being, the government now is striking back, but nonetheless, they expose a chink in the armor of the SEC, and because of that, they've basically retraced back and skyrocketed, and now it's selling off again. But the fact is that there are still many investors committed to XRP and these finance projects that have been deemed illegal by the SEC. And we need to remember that crypto is not owned by the United States government. Crypto is global, and at some point there is going to be there's going to be a time where the government can't do anything apart from banning it altogether, as you know, like banning every kind of central exchange or blocking all of the DeFi exchanges. I don't really see that happening. I mean, we'd have to become a full-on communist nation, although I don't want to speak too soon the way things are going, but I don't think it's going to happen like that. I think that this is just making way for the CBDCs like we talked about, and also bringing these tokens down to an area where they can be accumulated at rock bottom fire sale prices, which I believe is what's happening. We see that Dash, for example, is being accumulated. It's being accumulated on the way down here. It's going to go further down. I believe it's going to go further down, and we may come back and do like a quadruple mitigation of this area here, this a sign of weakness. If that happens, then we have the one Fibonacci retracement at $25. We're at $32 right now. It's possible that we can go down before this is all said and done. We could hit the one Fibonacci retracement, which would bring it down to $25.33. And then if we go down even further, I don't think we can go all the way down to the 1618, because that's very, very drastic. I did the calculations for that. I don't see us going that far, but certainly anywhere between the 1.272 Fibonacci retracement and the 1, which gives us a span of between $25.33 as the high and $11 and a penny as the low. Anywhere in here, in this area here, is prime. This is where, this is not financial advice, but this is where I will be accumulating like a son of a bitch, man, with this token. And not only this token, but Algorand as well, Solana, Zcash, all of these distressed tokens and coins are hitting these Fibonacci retracements. It is a prime time to accumulate. Again, this is not financial advice. This is what I'm doing. I just share what I'm doing. I've been extremely successful in crypto, and a big part of that is because I buy the blood. I buy traumatized assets, and then I hold them. And I have my principles, and if you have your own trading principles that you don't transgress, you will be safe. And here are my principles. Number one, I never go all in. I don't go all in. If I have $1,000 or $2,000 to put into Algorand or into Dash, I don't put $2,000 all in. I scale in the deeper it goes on the retracements. That's why I calculate the Fibonacci retracements, and I scale in incrementally the further down we go. I also never invest income that I need to pay, that I need for bills and such. I only invest disposable income. As soon as I put it in, I consider it gone, or something I can sit on for 5 to 10 years if need be. It's money that's gone. It's money that otherwise I would spend, that I would go on vacation with, spend at a casino, go, just have fun with, eat, whatever, drink. It's fun money that we put in, and then you don't worry about it. It's gone. It's like buying lottery tickets, I guess. And then I diversify. If you diversify, there are so many other assets, and you have, what you do is you delegate money to each asset, and and you have a wide variety of crypto. It's essentially all this is a numbers game. And number 4, I take profit. Whenever it juices back up, you take profit. Ideally, you want to get back your original principal, what you put in, and then just let it, just let it ride. Just let it ride. But be sure to take profit. And if you can do these 4 things, these are my golden guidelines, then you will always be safe. And that's what I'm doing with these traumatized tokens. All right, guys, we'll talk more about this later. I've got some more videos coming out. And but for now, check out Dash, check out Algorand, and there'll be others that we'll talk about. And let me know what you think down in the comments. And if this is proved, helpful to you in any way, go ahead, give me a like, subscribe, and you'll get more uploads as soon as I upload them. All right, guys. Well, that's it for me. Man, I need more coffee. My brain, I'm like gassing out right now. But this has been fun. All right, guys. Thanks a lot. Have a great week. Talk to you soon. Bye-bye.